Hello, I'm Brian Rezny, President of Rezny Wealth Management, and today we're diving into the U.S. economy's current trajectory. We're at a critical juncture with shifting policies, disruptive technologies like AI, and some downright quirky economic data. Let's break it down with the latest insights as of September 2025. Over the past 2 decades, from 2005 to 2024, U.S. real GDP growth has averaged a modest 2.0% annually, a step down from the robust 3.2% pace in the prior 20 years, from 1985 to 2004, despite incredible technological leaps. While retiring baby boomers play a part, I believe the real drag has been the growing size of government, crowding out private sector growth. Government spending spiked during the 2008 financial crisis and again during COVID, paired with the Federal Reserve's ultra-low interest rates, a surge in M2 money supply, rapid immigration, and stricter environmental regulations. Economists promised this would fuel growth and jobs, but instead, growth slowed. Now policies are shifting. The Big Beautiful Bill blocked a major tax hike set for 2026, making current tax rates permanent. Tariffs are rising, immigration has slowed significantly, with the foreign-born labor force down by about 1.2 million since January 2025. And regulations are being scaled back. These changes could unleash stronger private sector-led growth. In the first half of 2025, GDP growth was uneven. Q1 saw a 0.5% annualized contraction, but Q2 bounced back with a strong 3.3%. The Atlanta Fed's GDP Now model projects 3.0% for Q3 as of September 4th, which would put the annualized growth for the first 3 quarters at about 1.9%, still tracking the long-term 2.0% trend. Artificial intelligence is taking off, and while estimates vary from a modest 0.7% boost to U.S. productivity over the next decade to a potential 15% GDP uplift in developed markets, experts agree it's a positive force. The Wharton budget model forecasts a 1.5% GDP increase by 2035, and Stanford's 2025 AI Index shows AI already closing skill gaps and boosting workforce efficiency. Uncertainty is high, and recent data has been erratic. Non-farm payrolls grew by just 22,000 in August 2025, with average monthly gains of 70,000 over the past 7 months, half the 146,000 pace from the same period in 2024. Revised data also cut job creation estimates by 900,000 for the year through March 2025, signaling a cooler labor market. Trade patterns are volatile, contributing to GDP ups and downs, down in Q1, up in Q2, and projected higher in Q3. The sharp drop in immigration is likely slowing job growth, with Brookings estimating low immigration scenarios could reduce real GDP by 0.4 percentage points annually. On a positive note, government payrolls fell by about 97,000 over the past 7 months, the largest non-census-related drop in 35 years. I see this as a long-term win for private sector growth, though it's a short-term drag on jobs. Despite weaker job numbers, consumer spending is holding up. Retail sales from May to July 2025 rose 3.9% compared to 2024, showing resilience despite tariff pressures. Auto sales are also up, averaging a 16.5 million unit annual rate year-to-date in 2025 compared to 15.5 million in the first 8 months of 2024. Manufacturing output grew 0.8% in the first 7 months of 2025 versus 2024, a solid gain given the sector's output is still below levels from a decade ago. Fed data shows Q2 2025 output up 2.4%, with productivity rising 2.5%. Some of this ties to reshoring, driven by tariffs, which aim to boost domestic production. However, the stop-start nature of tariffs and legal uncertainties are holding back bigger investments. Companies are cautious about major U.S. expansions when the future is unclear. A critical case before the Supreme Court, VOS Selections, Inc. v. Trump, questions whether Congress delegated tariff authority to the executive or if trade deficits and border security count as emergencies. Kalshi's prediction market gives only a 55% chance of the court upholding the tariffs, leaning toward a loss for the Trump administration. Even if the court strikes down tariffs by early 2026, it's not the final word. President Trump could use other existing laws or push new legislation through budget reconciliation, needing only a simple Senate majority. Expect continued uncertainty here. Back to AI. It's a game changer, like railroads or cell phones, speeding up efficiency, communication, and trade. But it could disrupt sectors like search and coding, where tech job growth has flattened. PwC's 2025 Global AI Jobs Barometer notes, AI adds value to automatable roles without causing mass unemployment, though some will benefit more than others. We're not yet seeing a 1990s-style internet boom. Growth hasn't surged. But long-term potential hinges on Congress and the president getting spending under control to avoid fiscal headwinds. If you enjoyed this video and want your friends and family to have the same excellent education you've received, feel free to forward it on to them. Stay informed, and let's keep navigating these economic crosswinds together.